I'm Carolyn Herbert and welcome to Market Moves. Today's star performer on the 200 is Sundance Energy, which rose 12%. And the day's worst performer is Ozforex, which fell 10%. More on them later, but first let's take a look at the share market. The S&P ASX 200 closed up 0.19% at 5,309 points. To the performance of the different sectors, the materials space saw the best gains, up 1.2%. Energy also up strongly with a 1% gain. It was a different story for the telecommunications sector today, down 0.7%. Consumer staples also weaker with a fall of 0.6%. And looking at the biggest movers in terms of index weight, the HP Billiton led the market higher, up 8.4 index points. Macquarie Group also stronger with a rise of 3.8 index points. Oil Search, CSL Limited and QBE Insurance also making the list today. And the biggest drag on the market by index weight, the Commonwealth Bank fell 3 index points, Telstra also weaker, down 2.4 index points, Woolworths, Westpac and Scentre Group rounding out the bottom movers by index weight. And here to take us through what's moving markets and why, Michael Kodari from KOSEC. And you too can join in the conversation with a question or comment by emailing us at yourmoney@skynews.com.au or by using the hashtag MarketMoves on Twitter. Now, Michael, it's been a bit of a mixed day for the market. Shares made moderate gains, but it was pretty much wiped out at the end after the Chinese market fell 6%. What can we say about that?
Look, it's very interesting. I mean, China's GDP figures come out tomorrow. What people have to expect is China's GDP is going to slow down. And, you know, for us, if you're in an environment where oil prices have dropped, what the Swiss National Bank did put a lot of uncertainty in the currency markets. So, you know, for us, it's all about picking the right companies in the right sectors of the economy.
Now, business confidence has taken a bit of a battering over Christmas. That's what a new Chamber of Commerce survey has said today. Why are businesses so pessimistic at the moment?
Look, it's the environment hasn't been the best. It is interesting, though. New car sales are up 3% for December. Lower oil prices, you'll think lower petrol prices will flow into the economy in terms of consumer spending more. You know, it's interesting. Businesses are pessimistic for the year because one of the big reasons is because of the mining sector and the jobs relocating from mining to a different industry. So, you know, it's one of those where, you know, they sort of want to push the RBA to lower interest rates. But a lot of that comes into account on Wednesday when we see our consumer survey reports coming out. So that'll be very interesting in terms of, you know, how much confidence does a consumer have.
Now, with the unpegging of the Swiss franc last week, should investors be looking at local opportunities given the strength of the Aussie dollar at the moment?
Look, the Aussie dollar is holding up very well. You know, for us, what we tend to do is we look at the data that's coming in terms of macroeconomics and think, all right, if the Australian dollar falls, you know, the valuation where the RBA has it is at 75 cents. So they're expecting it to fall. If it does fall, what does that mean for businesses and what companies you're actually holding? We're looking to be in businesses that are exposed to the US market and the US dollar. So if there's not much business confidence in Australia, if a business is selling its product offshore and it's reporting in US dollars, it's going to do much better than a company that's basically selling and marketing its product here. So, you know, there's always opportunities to be money to be made in the markets, but it's all about knowing where to move this money around.
Now, petrol prices are on the way down. Would you say the falling oil price is stimulating the economy, and when do you think we're going to reach the floor?
Correct. Look, I guess oil prices going down will have a direct effect upon petrol prices. That itself means consumers have more discretionary income and they can spend more. One of the I guess the biggest issues with us is we've got the most saving rate in the world. So we're amongst the top 5. And if consumers aren't spending, they're saving more. If they don't have much confidence, then that's not good for businesses. So, you know, I do see as petrol prices do come down, consumers will spend more and that will flow into the economy.
Okay, well, let's take a look at some of the highs and lows of the day. The market hit a high of 5,372 and a low of 5,302. Around 543 million stocks changed hands, worth around $3.4 billion. And in terms of stocks by volume traded, Arium was the most traded stock today, with 33.5 million shares changing hands. Fortescue Metals also heavily traded, with 24.8 million shares exchanged. Telstra rounding out the top three stocks by volume traded. Now let's take a look at some of the top movers on percentage change on the All Ords today. Now let's check the top performers by percentage change on the ASX 200 today. The best performer on the market was Sundance Energy. It rose 12% today, finishing at 51 cents. The second best performer was Oz Minerals. It rose 8.3% today, finishing at $3.38. And rounding out the top three, ALS rose 8%, shares ending at $5.22. And rounding out the top 8 performers today was Sandfire Resources, Macquarie Group, Super Retail Group, Oil Search and AWE. Well, it looks like it was a really good day for Sea Limited. They were up about 15%. I mean, is that attributed to the oil price? Why do you think they're bouncing like that?
Their business model, again, is in oil and gas. Oil is plummeted, and a lot of these companies have been oversold. It's interesting, the last time I was in this show, oil was at $60 a barrel, and I predicted, stay away from oil. Now it's at $49.50. So again, a lot of these companies can have a good bounce back, but the future for oil isn't very bright. So any company that's a price taker, stay well away from them, even commodities. So, it's an interesting one with this stock.
Now, Sandfire's up about 7% as well. They're obviously a copper stock. Does this, copper dropped a lot last week. Does this indicate that there is some sort of bounce back in that commodity?
Look, it could, but, long term, unfortunately, everything's against you. If copper prices are falling down, doesn't matter in terms of how well that company's run, it's gonna be affected. So it's a stock that, I would be staying away from.
And the big news story of the day is obviously Macquarie Group. Their shares have surged today following the fact that they were going to meet their profit guidance. What would you say about Macquarie as a company? A lot of brokers have previously sort of recommended it as one that investors should be keeping their eye on.
Well, I guess their guidance is up 20%, so they're quite positive in terms of their outlook. Look, it's one of those companies, as the economy does well, as money is much cheaply available, companies like Macquarie and the large investment banks tend to do very well. So it's one of those stocks that we've traded in the past. We do hold some in our portfolios. So it's one of those possibilities for anyone that's looking to diversify and hold some, banking shares.
And Oz Minerals has also had a good day as well. What can we say about them?
Look, Oz Minerals has been a very interesting one. We haven't sort of valued it at the current price that they've been. So we've watched it, but we've moved away from that commodities sector. So, if you're looking to diversify, yes, you can get into an Oz Minerals, but, you want to be very selective in terms of picking stocks now. And, I wouldn't be touching anything in the commodities sector or the oil and gas.
Okay. Well, after this short break, we'll take a look at some of the bottom movers of the day. Welcome back to the program now for a look at some of the bottom movers of the day, starting with the All Ords. Now to the bottom performers on percentage change on the ASX 200 today. Oz4X had a shocker on the market, down 10.3%, shares closing at $2.43. The second worst performer was Arium, down 7%, shares finishing at 20 cents. And rounding out the bottom three, Linus Corp lost 5.4%, shares closed at 53 cents. And rounding out the bottom 8 performers today was Northern Star Resources, Paladin Energy, Mount Gibson Iron, Echo Entertainment and Regis Resources. So, Michael, you'd say it's probably no surprise that Oz4X is down given what's happened with the Swiss franc in the last week.
Correct. Look, a lot of firms in the UK have been affected heavily. A lot of these companies have gone bankrupt. So what's happening to Oz Forex in terms of the drop isn't a surprise for me. So it was a bit of a surprise for the entire market. And, you know, what this means is a lot of these things that happen, these news announcements that come out, they're not alerts. You just have to be very careful in terms of where your money is and which companies you're holding those, which stocks are you actually holding. So, you know, Oz Forex, you know, there's no... You know, it's no brainer why it's down. A lot of those companies that are in that down list are all in the mineral resources mining sector. So, you know, again, price takers stay well away from these stocks.
Now, what can we say about Arium? They're 6% down, obviously an iron ore producer. Is there any recovery in sight for iron ore? I mean, Arium, BC Iron, Atlas Iron, they've all been in the bottom performers for the last couple of months anyway.
Look, it's long-term if you hold a view, yes. But then again, it's all about timing. It's all about maximising your profits and minimising the time in terms of how you can do it. So, you know, you've got to be able to put your money at the right place at the right time. At this stage, I don't see iron ore companies being the right place to put your money in. Neither do I see the commodities market or anything related to commodities being the place to put your money in. So you've got to be very selective again. You know, gold might have had a bounce back, but again, you know, I don't see the future outlook being very positive.
But what about people that have those Arium, BC Iron, Atlas Iron shares? Should they just be hanging on to them now, or is it time to get rid of them and cut their losses?
Look, Carolyn, I mean, there's a reason why the market is liquid, and it's because you can buy and sell very quickly. So, you know, unlike the property market where you buy a house and you might hold it for the next 5, 10 years or 20 years, in the stock market, the ones that make a lot of money, they see the data that comes out and the announcements and they react on it. So you've got to know, you've got to cut the noise out and see the relevant data that comes out and how that affects your portfolio. And if it is coming out, you can't ignore the warning signs. So, you know, for me, you've got to be very smart and clever now in the market. It is volatile, but volatility also means opportunity. So if you move your money around from one company to the next, you can maximise your profit with that strategy.
But should they be disposing of those shares, do you think?
Look, I never get emotional with any stock. So, you know, if it comes down to cut my losses, you've got to do it.
Okay, harsh but true, I guess. Now, Northern Star Resources has also had a good day. Obviously, a gold miner, they're up 5%.
Yeah. Look, gold miners have done very well. You know, we invested in gold 3-4 years ago, and that was when gold was trading at $1,700 an ounce. Now it's about $1,290. Again, it's done well, gold, recently, but going forward, with the way interest rates are, you know, I don't see gold prices rising up anytime soon.
Okay, well, let's look at some of the day's upgrades and downgrades thanks to FN Arena. Morgans rates car sales as a downgrade to hold from an ad. Falling vehicle listing volumes are a near-term risk to earnings momentum in the broker's view. Most of the fall is attributed to the boycott on new vehicle listings imposed by 5 of the largest manufacturers. Short-term competitor activity and market cycles could mean carsales.com reports lower than expected growth in financial year 15 and financial year 16. Credit Suisse rates Harvey Norman as an upgrade to outperform from neutral. The outlook for Australian retailers is not going to get any easier in 2015, argues the analyst from CS. They see ongoing challenges from tepid growth in household incomes, a weaker Australian dollar only partially offset by cheaper fuel stimulus. And Citi rates Westfield as a downgrade to sell from neutral. Westfield is a major beneficiary of recent weakness in the Australian dollar, but Citi notes a weakening of the British pound also creates a headwind to earnings growth, given 30% of the company's assets are in the UK. Operationally, however, the broker contends that not a lot has changed, but continues to like the business. I guess we can probably talk about carsales.com first. I mean, that's always been a bit of a market darling, but it's been downgraded. Do you agree with this?
Look, it's interesting with the figures that came out. New car sales are up 3%. Tomorrow is going to be very interesting with the consumer confidence survey coming out. So I think, car sales will always have a monopoly, almost a monopoly on that market. About 80% of people that are looking to buy a car go through a car sales website. So, it is a great company. Return on equity is very high. The return on equity is 50%. So if you put $1 into that business, you get back $1.50. One thing that I'm concerned about car sales is their debt levels, which are very high. They're in excess of, 80%. So, that's a concern. But then, long term, these businesses have established a brand. So the brand equity is quite strong. And, long term, these businesses will do well. It could be a short-term thing. Would I be buying car sales at this stage? Probably not. There's more opportunities I see elsewhere.
Now, Harvey Norman's been upgraded to an outperform. I mean, they've obviously done very well over the Christmas and New Year period, which is interesting given the level of consumer sentiment. What are your feelings about this company, and do you agree with that rating?
I guess, Harvey Norman sells products and goods to the consumers. So if consumers have more confidence and they spend more, the stock price of these companies does well. So oil prices being down affects petrol prices. As petrol prices are down, consumers have more spending money to go out and buy more products. So one of the reasons why, Harvey Norman's been upgraded. But it's very interesting, if gas and oil prices are down, then you'll think, car sales will be an upgrade too. But, Harvey Norman has always done very well. It's been a good company, but it's tough. With the Aussie dollar coming down, they can't purchase things as cheap as they could when it was much higher. So, these sort of businesses are very tough businesses to be in.
Now, not so lucky for Westfield. They've been downgraded to a sell. Where is this company going wrong?
They've done very well over the past 3 months. Their share price is up in excess of 20% over just 3 months. It's risen very well. The Westfield model, I don't believe in it. I don't think you can go on. It is very tough. They do charge high rents. So I don't think the Westfield model will be sustainable over the long term, but their share price has done very well. For me, I would be selling Westfield.
Okay, so let's talk about a stock that you feel excited about at the moment. What would you sort of say to the viewers or one to keep their eyes on?
Last time I was on this show, I recommended ResMed, and ResMed has done very well, and this is in a period of about 3 to 4 weeks. The time before that, I recommended Cochlear. Again, Cochlear has done very well. So, why do I like these businesses? They're exposed to the US market. So if consumer confidence is down here, if business confidence is down, US market is doing very well. So they sell their products out there, and a lot of their earnings comes through US. So, that's why I like these businesses. I like their business model. They tailor towards the baby boomers, so it's in the healthcare sector, and their share price has followed. So if you watch these stocks over the past month or two, they've done very well. They're not in the mining sector, they're not in the oil and gas sector, so there's money to be made in the stock market, but you just have to know what you're doing, and you've got to move money around to the right place. So you can't just sit back and watch your portfolio go down.
But I mean, ResMed have increased by something like 40% in the last few months. They're doing, like you say, they're doing very well. So is now the time to really buy them, given they're kind of on that upward trend, or would you wait for a drop?
It's always good to buy a stock, regardless of the price. I don't look at the price. I mean, if you look at what the business is doing, their return on equity, their cash flows, their sales. Now, the price of a share goes up because people like it, they see potential, they start buying it. A lot of analysts might buy stock that's going down. You don't want to buy you don't want to catch a falling knife. It's always better to buy a stock that's heading up than catching a falling knife. And that's one of the mistakes a lot of people make. But these are good quality businesses. They're in the healthcare sector. The market is very large for them, and they're selling their products offshore.
Okay, well, now we have time for a viewer email. Ryan writes, hello, I was just wondering about 2 businesses for a longer investment. Can I please have your opinion on HealthScope and Wesfarmers? What do you think about those 2 companies? I guess we can start by talking about HealthScope in light of what you just said about the health sector.
Excellent. Look, I like HealthScope more. Again, those 2 businesses will be there long term, both of them. You'll make money long term out of being in those 2 businesses. But, the health space is what I like the most because of the falling Australian dollar, because of the ageing our aging population. And, I think that's the sector to concentrate in now. Forget about, you've got to be very selective. And, out of those two stocks, HealthScope is what I'll be picking. But then again, my top stocks are Cochlear. And I've been consistent every time I've recommended stocks over the past 3 years. So, it's all about understanding the market, getting the right data, shutting the noise down, and really seeing the business and the macroeconomics when you pick a stock.
And what do you feel about Wesfarmers?
Wesfarmers, Coles will always be there. They've made some better choices than what Woolworths has. So, they'll be there for the long term. People need to go and buy groceries and do their shopping. So, a business like that will always be there. They've diversified into other things as well. So, it's a good business. But in terms of a time frame where I can maximize my returns or profits, it wouldn't be a business that I'll probably get in now. There's more sectors that I see more potential than being in Wesfarmers, for example.
Is there anywhere in that retail space, I mean, obviously Wesfarmers has diversified past retail, but is there anywhere in that retail space you would consider?
Look, very tough. If you diversify too much, your returns go down. So, for us, we hold 5-6 stocks. And, if those 5-6 stocks average 20%, 15%, we've done very well. So, instead of diversifying to mining or retail, we want to put our money where, we can see a good return. And a lot of people on the rich list have made their money investing in just one business, not 5, 6 or 10 businesses.
Well, that's all we have time for on this edition of Market Moves. A big thank you to our guest host, Michael Kodari from KOSEC. I'm Carolyn Herbert from the team here. Thanks for your company.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.